Before its big bang, Bitcoin wasn't worth the power bill. Just 9 years back, it traded for a penny, then it blew up.
It went from a fringe concept, only discussed on forums, to a topic on the evening news, filling up all of the quarters. But forget the price action, that is only the symptom. The real story is much deeper, it's about a revolutionary system.
Everyone's focused on getting rich quick, but they skip the blueprint. They don't know the tech behind it, or what makes the value imprint.
It's not just another digital stock or a flashy new asset, it's a completely new trust mechanism, a digital, secure habit. We gotta talk about the core idea that ignited the whole fuse. It's the fundamental economics that traditional banking did refuse.
How can something that only exists on a screen have such insane value?
So, stay locked in as we break down the ledger, the miners, and the chain. We'll see why the system is trustless so we can all feel the gain. This is not just about speculation or betting on future success. It's about a foundational economic shift, which we will now address. First, we'll define the digital coin and its true decentralized structure. Then we'll get into how the miners enforce the strict rupture. Stay with me right through the whole video, don't skip a single part, because the final takeaway, I promise you, will impact the whole heart.
I know though, right? Now let's jump into the tech and explain why it's not an illusion.
So what is Bitcoin really at its very core? It's a digital ledger built on cryptography, nothing more and nothing less for sure. It's not money printed by a government, it's money that's digital. The whole system is run by computers, meaning it is not vestigial. Why does it exist? Well, traditional money is centralized and can be controlled by a few. Bitcoin came to fix that issue, so now the power's with you. Bitcoin is digital money built on math, secured by a shared public ledger, designed to operate without any central bank, so no one can leverage. Every transaction is stored and verified by a network of global computers. This is what makes it trustless, so there's no need for any shooters. It means you don't need to trust a bank or a government to handle the transfer. You only trust the code and the math, which is a big asserter. Now you might be thinking, what stops me from copying the file and spending it twice to get all the coin? That's the main challenge we join. The double spending problem is handled by the shared ledger that verifies every single past transaction, preventing any big error or action. That shared record of all transactions is called the blockchain. The key to the tech, every computer has a copy so you know who is correct. Bitcoin is digital money built on math, secured by a shared ledger, and designed to operate without any central bank or middleman. To understand the mechanics, let's use a simple analogy, because the concept of digital ownership can feel like a deep pathology. Imagine a high-stakes neighborhood poker game, but it's digital. The table is the network, where the moves are all quite pivotal. You and your friend Alice and Bob want to trade some chips, but there's no dealer or bank, so the trust is on the tips. Alice wants to send 5 digital poker chips to Bob in exchange for the goods. Without a dealer, how do we know she really has 5 chips under the hoods?
This is where the network of computers, which is the table, comes into play, and everyone at the table has a copy of the chip totals, ready today.
When Alice sends 5 chips, the whole table checks the history right on the spot, confirming her previous chip balance, making sure she has got what is hot. That's how Bitcoin solves the double spending problem with the shared digital chip. No one can fake the records or try to take a secret trip. But how does that new transaction get written onto the table's master list? We need a way to group and confirm it, so no one can resist. All new transactions are bundled up and grouped together into a block of data. That block then gets sealed with a complex cryptographic marker for the day. Once that block is confirmed, it gets added to the end of the existing chain. This is the blockchain, and now we're moving, so get ready for the rain. But who does the work of adding this block, and why do they take the time to run the power? We'll check out the mining process in the very next hour.
This is where the technology and the ideas behind Bitcoin really hit their fire.
The decentralized ledger is the key, so hold that thought right inside of your head. Now let's jump into how the network confirms everything that is said.
Okay, let's get into the engine room. The proof of work is the key. It's a competition that forces computers to agree with me.
Step 1. A transaction is sent from Alice, like 5 chips to Bob. It goes to the network, which verifies the funds without a single sob. Then that transaction is grouped with others in a package called the block. Step 2. Cryptography verifies the sender's signature with a complex math check. It proves ownership without revealing identity, a major network tech.
Step 3, now we meet the miners as they steal the coin.
They are competing to be the first to solve a complex math puzzle for the block, finding a nonce to create a hash right around the digital clock. The first miner to solve it wins the block reward, which is a pile of brand new Bitcoin. This prize is the core incentive to keep the network keen.
Step 4. That newly mined block, which contains all the validated transactions, is now added to the existing blockchain without any infractions. Because the chain links to the hash of the block before, it's impossible to go back and rewrite history, locking the data forevermore. Any attempt to alter the past would require remining every block since the change. That much energy is impossible, securing the whole digital range.
Step 5. The transaction is confirmed, and Bob can now spend the 5 chips he has got.
That's the basic loop of the technology, the shared, decentralized trust, and that's why Bitcoin is durable and not reduced to just dust.
Now that we know how it works, let's see why that mechanism is a huge advantage. A real-world example will show the power on the next page.
It cuts out all the banking middlemen, speeding up transactions quite a bit. That's the real advantage of the network, so don't forget it.
Tech's not just a fancy digital clock, it's a new form of digital cash, a decentralized, immutable record that came in a flash.
But forget the technical language and the cryptography on the screen. We need to see the real power of Bitcoin, so listen to the keen.
It's a global settlement network that works faster and cheaper than any other. This is why the explosion happened, which we'll learn from each other.
Now that you know the flowchart and the steps of the 5 digital acts, let's see a practical example and focus on the cold, hard facts.
But first, let's quickly recap the idea of trust that the system tries to impart. It's a global machine run by math, giving everyone a new restart.
Let's look at why Bitcoin's mechanism is a huge practical advantage for people moving money around the globe, something traditional banking often can't fully probe.
Imagine you need to send $10,000 overseas to a family member in a different zone.
A wire transfer might charge you $350, not to mention a delay, and often it takes up to 3 business days before it's on its way.
Bitcoin cuts out all those slow-moving banking parties and the cost. Now you can send $10,000 without getting completely lost.
The cost of a transaction is usually only $5, that's a flat rate, and the confirmation time is 10 minutes, so you don't have to wait.
This is huge for people who rely on remittances to send money back to their family. It gives them immediate access, reducing the banking calamity.
It's a clear case where the decentralized technology beats the old system by a mile, faster, cheaper, and more reliable, bringing a better style. This difference in speed and cost is the foundational value that the network provides. It's an open source movement where the real power resides.
It's a system that's open to everyone globally, without needing a checking account, so millions of unbanked people now have the power to surmount. But there's one hidden variable that is baked right into the Bitcoin code. That's why the value doesn't just come from the speed of the load.
If the miners keep getting new Bitcoin as a reward, won't the supply inflate too much? That's what we need to figure out and understand the core touch.
We have the cost saving and speed of the transaction, which is one side of the coin, but the supply mechanism is the reason why people want to join. This is the crucial economic concept, the final piece of the puzzle to find why Bitcoin's value is skyrocketing and leaving everything behind.
Unlike central banks that can print money forever, this one has a cap. Bitcoin will only ever have 21 million, so let's check the roadmap for the trap.
This scarcity makes Bitcoin different from fiat currency, which is money with no fixed limit. It protects holders from inflation. The way this limit is enforced is called the halving, which is a planned supply shock.
Every 4 years, this event occurs right on the preset Bitcoin schedule.
You have the same level of interest, but the supply is suddenly cut in half. Simple economics dictates that the price will take the upper path. Every previous halving event has led to a massive and predictable surge in value. Because the fixed supply hits demand, that is the thing that really does compel you. It's a guaranteed tightening of the supply, something you can't get in the market for gold, a hard cap on creation, which is a story that should be told. This is the full economic picture, why the price has gone so absolutely high. It's the convergence of trustless tech and scarcity beneath the digital sky. It's a digital store of value that can't be inflated away by any nation, and that, my friend, is the reason for the Bitcoin price explosion with dedication. It's not just about the short-term gains, but the long-term stable design, a new financial system built on code, marking a permanent line. Scarcity is the economic fuel that propels the price action to the top, while decentralization is the engine that simply won't stop.
I'm the money guru, and that's the whole story, so thanks for watching the end. Please like and subscribe and tell all of your closest friends.
All right, let's wrap this up, bringing all the pieces together in a summary flow. Now you can explain the whole process, so you're ready to go.
Point 2. The blockchain technology solves the double spending problem right away. Its immutability and shared ledger secure all the data every day. Point 3. The network is secured by proof-of-work mining, which is the system's core fuel. The reward is the incentive to keep the network running, which is so cool. Point 4. The practical use is fast, cheap, global transfers and low costs, making it superior to traditional systems no matter what it costs. Point 5. The fixed supply of 21 million creates scarcity by design. The halving event cuts the new supply in half, right on the digital line.
It's the convergence of these key elements that makes the price rise and grow.
This is why Bitcoin is so much more than just digital trading hype. It's a new financial system, the future for all of our life's type.
I'm the money guru, signing off on the explanation for the day. I'll catch you in the next video, so stick around and please stay.
I'm the money guru, and that's the full explanation for the Bitcoin price today.
If you want more breakdowns of complex concepts, make sure you hit that subscribe bell, and I'll drop the knowledge straight to your feed, wishing you very well.
You can also follow me on all the other platforms for my daily financial rhyme to stay sharp and stay ahead of the curve, giving you back your precious time.
Check out these suggested videos that are popping up right on your screen if you want to take a deeper dive and keep your finances keen.
Remember, the key to financial freedom is knowing the power of the code. Peace out, and I will catch you on the next upload, carrying a lighter load.